Hello, this is Randy Lindsay with Hawkeye Traders. I just want to do a quick follow-up on my video update from yesterday on the breakout. This is the S&P 500 on the daily chart, and we saw the big push down, and I was saying that trouble was brewing in the markets, and I identified that volume, referring to as a V swarm, a swarm of traders who are out there trying to push the market one direction or another. And we're starting to see a big increase in our V swarm, and we're starting to see yesterday's price action did actually get down to over here, the weekly trend line, got very close to that. And I wanted to show you one other chart that I've been monitoring. It's the volatility index. Volatility is a key player in the markets, and whether to see the price action in a market is highly related to the volatility. Volume, price, and volatility play very well together in the future price direction. So seeing volatility, I've been watching this downtrend for quite some time now. Price had gotten to extreme lows. See, the price of the volatility index had gotten down to 11s, which historically is extremely low and implies bullishness in the market. And that's why I have attached the Hawkeye trend in reverse, showing that in a downtrend, the volatility is bullish, but in an uptrend, it is bearish. I'm also seeing that my heat map, which I have also reversed in colors, is showing that this volatility spike is very bearish. Okay, this bullish spike in volatility is a bearish indication, but it capped itself up at the lowering trend line. So watch for an inside bar. Now notice that we had previously showed the breakout of this as an engulfing price bar, followed up by another very strong downward push. And we saw also the increase of our V-swarm indicator, giving us an indication that weakness has definitely gone into this market. But right now you're seeing slight rebounding intraday of this price, and I don't anticipate that getting any higher than 31.2150. That's a true inside bar, will stay inside the previous price range. It could continue to break out, and we would expect it to go at least to a 30.31 or below, but we're watching this. And let me go ahead and put my zones on this chart just to show you anticipation. See, we've already created two supply zones. Two demand zones. These are green, so they are demand, price coming back in, which could cause this to stall, and then we would get another stall point right down in here. But if either of these break on 30.31 or 30.20, we would expect to see price back down at the 29.58 level if these do break. However, that's two separate breakpoints we need to see before it does. And so if this is a true correction or reversal, which we would expect to see 3 to 5 price bars of correction because this is a phantom isolated high, then we would expect to see this as an end bar, and we would see at least one more price or two to get to this point. If we don't break it, then this, like previous price action, might just be a simple correction, and then if we look at an upward trend line, we'd end up right about 29.58 before we start headed back up again. Thank you for your time. If we go back over to the future price intraday, overnight, we can see, based upon that result, that the V-swarm is showing us that during the London Open, there is a big push of buyers trying to capture the weakness that was in the market. And you're seeing that here again, a big swarm of buyers coming back in trying to push price back up, but they have capped out at right or just over 3100. And based upon my 60-minute zones, 31.16 to 31.2050, which is the top of that daily price bar, is the overhead supply and the resistance that we would be looking for. So price tends to stay in these ranges and work through those. Learn more about V-swarm volume in the markets by coming to my free live training room. It'll be today at 9:30 a.m. Also every single week at 9:30. And go to our website, hawkeyetraders.com, and download our free ebook or find out how to get your copy of Hawkeye. Thank you very much.